All right, measurement at initial cost. Okay, so why do you need to learn about the measurement at initial cost? What is recognition criteria? Okay, there are sometimes students who still wonder, why do I have to learn all this? Okay, what all this all about? All right. Okay, so far, okay, what you have learned sampai recognition criteria tadi. Okay, now bila sampai recognition criteria, it means that you are able to debit PPE. You are able to create an asset account called PPE, okay, for land, for building, all right? And then you may credit here, depend on the method of payment, okay, cash or payable, okay. So the next stage that you want to learn here, okay, measurement at initial recognition, is to answer this one, is to answer how much should I record in my asset account? Okay, so the reason why you want to learn the next part of the standard, which is the measurement, because we want to record how much. You are now able to recognize the item as PPE. And then you can open asset account called PPE. Okay, is it for land, for building? Depends on the type of asset that you purchase. Okay, different classes of asset. Okay, next question. How much? You purchase a motor vehicle. Okay, you purchase a motor vehicle with a purchase price of 100,000. And then the supplier gave you discount 5,000. And then you need to pay for road tax and insurance for the first time. And then you have to incur other costs as well related to the processing fee and so on. All right. Okay. And then maybe you ask someone to deliver the car to your premise. Okay. So these are the costs that you have incurred. So the question is, when I want to record my motor vehicle, because I purchased a car here, so when I want to record my motor vehicle, so I know that motor vehicle is met the definition of PPE, tangible item, used for administrative purpose, all right, maybe to or the production, okay, to transport the goods or services, all right, and then to be used more than one accounting period. Okay, for recognition criteria, probable, because it directly related to my income generation. Okay, and then the cost can be measured reliably, because when you purchase a new car, you can get easily the selling price of the car. Okay, when you search from the internet, you can get the price of the car. Okay, all right. So I met all of the recognition criteria, but the question is, how much should I record? Is it only the purchase price? Can I include the road tax and insurance for the first time? So that's why you have to learn the next one, measurement at initial recognition. So how to measure? How much should I record in my asset account? Okay, all right. Okay, so initial cost. So initially, when you purchase the asset, you have to record everything at cost here. But again, remember what is cost? Cash. It can be cash equivalent. It can be the fair value. Okay, why I keep on repeating this one? Because later on, you will have initial cost at cash price. You will have initial cost at cash equivalent. You will have initial cost at fair value. Okay, so initially, everything will be recorded at cost. So when I want to record here, it must be at cost. Okay, so here at cost. All right. But the thing is, what are the costs that I can include in the computation of my initial cost? All right, so that explained in here element of cost. Okay, all right. So there are three elements of cost. If I'm not mistaken, when you learned previously on MFRS 116, okay, they taught you of element of cost number 1. They focus on A and they focus on B. But now we are going to include also C. All right. So what is A, B, and C? So A is a purchase price. including import duties, non-refundable purchase tax, okay, after deducting trade discount and rebates. All right. Okay. And then B, any cost directly attributable to bring the asset to the location and condition. To the location and condition. All right, meaning that all costs incurred. Okay, when I purchase motor vehicle, what is my intention to purchase motor vehicle? My intention is that I want to use that motor vehicle for admin purpose as well as for production of goods and services. Okay, so that is my intention, meaning that that motor vehicle must be able, okay, to be running on the road. Okay, you must be able to drive safely on the road. Safely in terms of the safety, and then safely in terms of you driving the car legally. Alright, so to be legal, what else that we need to pay? We need to pay for road tax and insurance. Okay, so sehingga keadaan yang kita boleh guna, sehingga keadaan yang kita hendak dia berfungsi, intended by management. Okay. Alright. So now in the computation of cost, we can include the purchase price. Okay, purchase price plus import duty and purchase tax minus, after deducting, minus discount and rebates. Purchase price plus import duty plus tax minus discount minus rebate, if any, plus other costs. Okay, for example, road tax and insurance for the first time. Okay, and then, okay, C. C is not relevant for a car, but it might be relevant for other type of PPE. Okay, so C, the initial estimate. Initial estimate meaning anggaran sahaja. Anggaran of the cost of dismantling. Dismantling meaning you runtuhkan sesuatu, you robohkan sesuatu. And removing, after you dismantle, you remove and then you restore the site. Okay. Alright. So for this one, I'm going to give you another example. Okay. For example, you rent a land. Okay. You rent a land and then you build a petrol station on the land. Okay, let's say for example, the rental period is for, the rental term, okay, is for 20 years. Okay, so you have built your petrol station here, okay, for 20 years. But after the 20 years, in the agreement stated that after 20 years, you have to clear the land. Okay, you have to clear the land and return to the owner as it is. Okay, you have to clear everything and then you have to return the land as the first time when you rent the land. Okay, so today, okay, this happened in 20 years time, but today, okay, today, when you start to build the petrol station on the land, okay, you have to include that in your, you have to include the cost in 20 years time. Okay, you have to include the cost, how much I have to pay for dismantling, for removing, and for restoring the site. Okay. So here, you have to know, you have to find the estimate. Okay, katakanlah estimate kat sini maybe 1 million. Tapi bila kita kira nak masuk kat sini, okay, kita mesti take the present value. We take the present value. Katakanlah present value dia, I'm not good at calculating the present value. So maybe I put it here as the present value only 600,000 assumption. Okay. Alright, so assuming that the present value is 600,000. So we must include in the computation of initial cost. Okay. Alright, any questions so far? Okay. So elements of cost, there are three elements of cost. When you calculate the initial cost, when you calculate subsequent cost, if it can be recognized as PPE, you have to consider, you have to take into account these three elements of cost. Purchase price plus minus, all right, and then any cost directly attributable to bring the asset to its location and condition, and initial estimate of dismantling, removing, and restoring the site. All right?
Madam,
Okay. Yes.
so yang initial estimate tu ambil yang 1 million tu lah.
No, we take the present value.
Oh.
1 million we may incur in that 20 years time. Right? In the 20th year too. Okay, but today when we want to calculate the initial cost, because we calculate the initial cost today, we want to record in our books today. So we find the present value. This is what we call cash equivalent. All right. So this is why in the definition of cost we have cash or cash equivalent. So we take only the present value, which is the cash equivalent. If I have to pay that amount today, this is the present value. Okay. All right. So let's look at the example. Oh, not yet the example. Okay. So initial cost. Okay. In acquiring the asset, in having the asset, okay, there are different ways for us to have the asset, to own the asset. Okay, you either go and purchase the asset, okay, or you may construct your own asset, or you may decide to exchange your asset with another asset. Okay, exchange, the most simple example is you trade in old car for a new car. Okay, so the question is how to calculate the initial cost. Okay, so we start with PPE, purchase for cash, or using normal credit term. Normal credit term here is for a term which is less than 1 year. Because if it is more than 1 year, then we have another subtopic for that one. Okay, we are going to look at that after this. All right, so PPE, purchase for cash. This one is very clear, or using normal credit term, where you are going to pay in installment but in less than 1 year. Okay, all right. So for this one is very clear, because when you purchase PPE, you have purchase price. Okay, so when you calculate the initial cost, you include the purchase price. Okay, include the tax and duty and minus discount and rebates, whether the discount and rebates are taken or not. Let's say for example, you purchase a car worth 60,000 ringgit. Okay, let's say for example the selling price is 60,000 ringgit, and then you receive a discount, okay, around 5,000 ringgit. But because you have so much money, so you told the salesman, no worry, you take that 5,000 discount, I pay you 60,000. Okay, discount you take because you are so kaya. Okay, so but when you want to calculate the initial cost, because of course in the invoice that they might issue, they are going to include this discount even though you pay 60,000. All right, so that 5,000, okay, you have to minus even though you did not take the discount. You pay in full 60,000 because you are so rich. Okay, so you don't want to take the discount. All right. Okay, so you can only record in your initial cost 55,000. All right, regardless whether the discount is taken up or not here. Okay, all right. So nak pergi mana kalau tak boleh record PPE? So then you have to send that amount to your expense in Sopel. Okay. Number 2, any directly attributable cost to bring the asset into working condition and intended use and location. Okay, any directly attributable cost. Okay, another example. Let's say, for example, you purchase of land, okay, with full of trees on the land, okay, but the intention of the management when they purchase the land because they want to build a new building. So before we can build a new building, the intention to use the land is to build a new building. But if you did not clear the land first, can we build the building? No, we cannot build the building. So we need to incur cost on the site clearance or clearing the site. Okay, any cost incurred to clear the site then can be included in the computation of initial cost. Why? Because the management wants to build a building on the land. So the land must be clear from any trees, from any old structure of building. Let's say, for example, when they clear the land, they found, oh, there is an old house or old building on the land. So we need to clear everything. We need to remove everything. Okay, so all the costs incurred, okay, can be included as initial cost of land. Okay, all right, because the intention, we look at the intention of the management. Okay, and the last one. Okay, the last one, as per the element of cost that we talked about in the previous slide, the initial estimate of the cost of dismantling, removing, and restoring on which it is located. Okay, so very clear for PPE purchase for cash. Okay, we can use all the three elements of cost. Okay, not to be included in the cost of PPE are administrative and general overhead expenses, startup costs, pre-production costs, relocation costs, and then exchange transaction difference of payable. Okay, so why? Give one reason. Okay, I'm not going to ask you to give me that reason now, but I'm going to ask you in the next class. Okay, so you have to find from your textbook. It is there in your textbook. Okay, if you don't have your textbook, then you have to ask from your friend. Okay, relocation cost is the cost of when you relocate, you move from one place to another. So that's one also. The cost that you incur on that asset also cannot be capitalized as PPE. Okay, we only record that as expense. Okay, when you move the asset from one location to another. All right, so on 1st January 2016, a piece of land was acquired and the following costs have been incurred in relation to the land. Okay, so what are the costs incurred here? They have purchase price, professional fee, site clearance cost, title search fee, allocation of general overhead, the present value of future restoration costs of 500,000. So this 500,000 is already the present value. Okay, will be incurred at the end of 20 years. So now calculate the initial cost of land acquired. Okay, so now everyone, okay, sit straight because I'm going to call any name, okay, to give me out of this cost, okay, which one is not to be included in the computation of initial cost. Yes, general overhead. Thank you. Okay, so the answer is correct, general overhead. Whereas other costs are the cost of the initial cost of land. Okay, purchase price of course, professional fees. Okay, maybe they hire someone to help them to purchase the land. Okay, site clearance cost because they need to clear the land, and then title search fee. Title search fee is a mass process when you purchase any land. Okay, you have to go to pejabat tanah and then you have to do title search before you purchase the land. Even though you already have the, what is it that we call the grant, okay, grant, okay, the title document, okay, but still we need to do that. Even though the owner dah tunjuk dah, ini grant dia, but still we have to go to the pejabat tanah, we do the process. Okay, required or must process. Okay, so mesti masuk. Alright, sebab you nak beli land. Okay, next, present value of future, because one day maybe, okay, there is a requirement, maybe they purchase from a government and then government put certain condition that after a certain period, here 20 years, okay, they have to restore the land. Okay, mungkin apa yang dia dapat land ni, mungkin dia guna untuk mineral extraction. Okay, dia jumpa sesuatu ke? Okay, so the government grant them the rights, okay, to explore the land. Okay, but after 20 years, they have to restore everything back to its normal condition. Okay. Okay, so now let's look at the computation of the initial cost. Okay, so as you can see here, we have the purchase price, the professional fee, clearance cost, title search fee, general overhead zero ya, walaupun dia masukkan but it is zero. And then you have your present value of future restoration cost. Okay, so next question that you have to ask yourself is how to generalize this transaction, because we have here present value. Do we pay for present value? No, the future restoration cost we only incur in the future. Okay, all right. But because of the obligation in after 20 years to restore the land, then we have to recognize that obligation today. Okay, so I think you have learned on the provision. Okay, last semester. Okay, all right. So let's look at the journal entry. Okay, so this is the journal entry. Usually in class, if I show you the answer, I usually start with debit and then I will write down here as PPE first because, okay, then I know that you know that this land is to be recognized as property, plant and equipment. Okay, so we take the initial cost. So this is the initial cost. Alright, okay, tak percaya? Tu ha, this one. Okay, sometimes I find students when they calculate the initial cost, they calculate the initial cost correctly, but when you transfer to journal entry, then you give me different amount. Okay, whatever that you calculate here, the initial cost is to be recorded here in the PPE land account. Okay, all right, and then the general overhead just now, okay, we are going to send to SOPL as operating expenses here. Okay, whatever amount that we pay, including the operating expenses here, okay, credit, cash or payable, but exclude future cost. That one we are going to create a new account, okay, called provision for future cost as per MFRS117. If I'm not mistaken, you learned this one in FAR 270. Okay, you are better than me because I did not go through in detail MFRS 137. All right. Okay. So is it clear on the journal entry for purchase of PPE? Okay, you debit. Yes. All right. Good. Okay. Thank you for the feedback. Next. Okay, what about self-constructed PPE? What about self-constructed PPE? Okay, for self-constructed PPE, my question is, do we have the purchase price? You construct your own PPE. All right, so we don't have the purchase price. Okay, so we don't have the purchase price. So we don't have this one. Okay, so we don't have this one. Okay, so in elements of cost, number one is the purchase price, but now we don't have the purchase price. We move to the next one. Any cost directly attributable the asset to its working condition and location. Okay, so for cost of PPE, for cost of self-constructed PPE, okay, all costs that relate specifically, okay, to the construction of asset, material, for example, material, labor, contractor cost and others. Okay, any cost that you incur directly in the construction of asset, you may capitalize them as PPE. Okay, and then any overhead cost, okay, which can be allocated to the asset, okay, also can be capitalized as PPE. Okay, any direct overhead. All right, and then, okay, we are going to add one more, which is cost of borrowings. What is cost of borrowing? Sometimes when the business construct their own asset, for example, they want to construct a building, they don't have enough cash, so they have to get external financing, for example, from the bank. So they acquire a bank loan. All right, and then the bank would ask them to pay for interest on loan. So the interest on loan is the cost of borrowing. When you borrow money, you have to pay the cost on borrowing, which is interest on loan. Okay, let's say, for example, the bank loan that you took to finance the construction of asset, okay, would require a repayment in 10 years time. You kena bayar dalam masa 10 tahun. But the building completed within 2 years. Okay, the building completed within 2 years. So adakah kita boleh capitalize sehingga 10 tahun ataupun sehingga 2 tahun? Alright, so dekat sini it stated that up to the point when the asset is ready for intended use, meaning that only up to 2 years. Okay, up to 2 years only. Alright, but you have to remember that, okay, even though I said that all costs you may include that relates to the construction of asset, okay, and then you can record them all as PPE, but you have to remember not to include internal profit, okay, internal profit or cost of inefficiencies. All right, so internal profit is, for example, okay, let me erase this one first. Okay, so internal profit is, for example, okay, you have a company, okay, so this is a company, and then your company has two different divisions. The first division is manufacturing, the other one is construction. Okay, so this one is manufacturing of steel, besi. Okay, manufacturing of steel. All right, so you would like to build a building, so you ask your construction division to build a building for the company. Okay, so this construction built the building using the steel from manufacturing department, from manufacturing division. Okay, so the manufacturing division send the steel to the construction division. But when they send the steel to the construction division, okay, in their record, because you have to record everything, right? Inventory in, inventory out, you have to record everything. So when they record the inventory that goes to the construction, they record at selling price. They record at selling price instead of they record at cost, as if they are selling to the third party. So there is an internal profit because it is between or within the same company. All right, so if you find any internal profit, okay, it will be mentioned in the question. Okay, so then you have to deduct. Okay, you have to deduct. All right, and then the next one, cost of inefficiency. Cost of inefficiency happen, for example, let's say, for example, okay, when you check the building that is being constructed, okay, and then you notice that the building did not follow technical specification required. So you ask them to destroy that part and then rebuild the building. So due to the destruction of the building because it did not met the specification, okay, so that would be considered as cost of inefficiency. You cost wasted material, okay, and then we of course wasted labor because we send our labor to do the work. Now they have to remove everything, rebuild everything again. Okay, so any cost for inefficiency we have to deduct also from the computation. Okay, all right, so let's look at the example. Okay, a building was constructed using the company's own resources, the costs incurred are as follows. Okay, direct material, direct labor, direct overhead, general administrative overhead, payment for architect fee, interest on borrowing, okay, to fund the construction, material wastage. Okay, so calculate the initial cost of building. So one of the item not to be included in the computation of the initial cost of building is general administrative overhead. Okay, and the other is material wastage. Okay, the other one is material wastage. Okay, the company purchased direct material for 8 million ringgit, but out of that 8 million ringgit, okay, there is a wastage. Okay, calculation. Okay, so example 1.2, self-constructed asset. Okay, so we have here direct material 8 million, and then we minus material wastage because this one is cost of inefficiency. Okay, and then we have direct labor, architect fee, direct overhead, okay, and then borrowing cost, okay, up to the asset is ready for use. Okay, and then not to be included, okay, general administrative overhead. Okay, administrative overhead we do not include at all, but for material wastage we deduct. Okay, that one we deduct. Alright, if you have internal profit, then you deduct also. Okay, right. So the initial cost is 22.2 million. Okay, so how to record this one? Okay, so out of this one I think they already pay for this one, they already pay for this one, and this one. Okay, so no provision. Okay, if there is additional info saying that after certain years they have to disrupt the thing, they have to dismantle the building, the structure and everything, then we are going to include the provision as well. Okay, but now no such information. Okay, all right. Therefore, the journal entry is very simple. Debit the building, okay, and then the amount that you cannot capitalize, which is the general or administrative overhead, okay, the one that we do not include at all in the computation, then we remove. Okay, so we do not add to the computation. So yang ini akan pergi to SOPL. This one, PPE building. Okay, and then credit cash or payables. Alright, okay. Alright, so I hope you understand so far on the computation of initial cost. Okay, next one. Any question that you want to ask before I proceed? No question, okay. Alright. Okay, so this one is deferred payment. Okay, unlike cash purchase for cash or normal credit term, which is less than 1 year, deferred payment is credit purchase asset on credit, but the payment took more than 1 year. Okay, more than 1 year. Okay, more than 1 year. Unlike the previous one, that one is within 1 year. Okay, so how to calculate the initial cost? Okay, so when payment, look at the second one, when payment is not immediate and deferred, okay, tangguh ya, sehingga melebihi normal credit period, the cost is cash equivalent. Okay, usually cash equivalent is referring to the present value of future payment. Okay, and then if there is any difference, okay, when you have to pay for the asset in the future, okay, any difference between the one that you record and the amount that you pay to the supplier, the difference is to be recorded as interest expense or finance cost. Okay, so let's look at one example, okay, to be clearer on this one. All right, so this equipment, okay, on 1st March 2016 was acquired. The price is 4 million to be paid in 3 installments. Okay, so let me draw the 3 installments. So this is the timeline. 3. Okay, so when we talk about time value of money, today biasanya kita note as 0, right? And then this is 1, this is 2. Okay, alright. So today 50% of 4 million was paid immediately. So how much? 2 million. So paid immediately. The remaining 50% was paid in 2 installment. Okay, so 50% here. Okay, the balance 20% divided by 2, so 25% here, 25% here. So 2 million is here. So we have a balance of 2 million to be paid in the following year, another 1 million, and then another 1 year. Okay, in the following year, another 1 million. Okay, all right. But for the recording purpose, okay, we are going to record the initial cost today. Okay, today. So to record that, okay, we need to find out how much is the present value for the amount of 1 million to be paid in 1 year time, and then how much is the present value, okay, of 1 million to be paid in 2 years time. Okay, all right. So it is given here. The present value is 952,400 and 907,000. Okay. All right. So 952,400, 907. Okay. This amount then will be included in the computation of initial cost. Not that 1 million. 1 million is the amount of money that we need to pay to the supplier. But in the computation today, we take the present value. Okay. And then other cost incurred, yes, delivery and handling, paid immediately. So paid immediately, then we put it here, 100,000. The total is the initial cost. Okay, so calculate the initial cost of the equipment. Right, so same computation here, 2 million, 952,400, 907, 100. So this is the initial cost. So the initial cost here then will be recorded here. Okay, so debit equipment 3959,400, credit cash. Okay, cash. Why cash only 2.1 million? Because this is the amount that we pay immediately and this is the amount that we paid immediately. So credit cash 2.1 million. Okay, what about the other two? We record as account payable because you are the one because you berhutang. Okay, you want to pay in installment. Okay, so berhutang, then you create account payable. So credit account payable, the total of these two, okay, jadi 185,900. So this happened in year 0. Okay, this happened in year 0 today. Okay, when you record the transaction. Okay, but then okay, there's something mentioned here that the difference. Okay, yang ini bila pula? Okay, that one will happen in year 1 and year 2. Here, year 1 and year 2. Okay, kenapa dia kata ada different? Okay, ada different because, where should I draw this one? Okay, I draw it here. Okay, because, okay, year 1. Okay, when you make the payment, so kita ada account debit, kita ada credit. Nah, account ada dua je, debit. Cara nak record double entry. Okay, ada debit, ada credit. Alright. So when you pay, your cash reduce. Alright, so you credit cash. Okay, and then you are going to reduce your account payable. Okay, so I'm going to pick any names. Okay, to give the amount that we are going to pay to the supplier. Yang mana satu jumlah dia? Is it 1 million? Is it 952,400? Okay, so next person, Nur Nadia. Nur Nadia? Present, absent?
Ini saya Madam.
Okay, so nanti tahun depan, masuk tahun depan, you nak bayar berapa dekat supplier? Berapa lagi?
$1 million.
Yes, 1 million. Very good. Thank you. Okay. So credit cash 1 million. But how much the amount that you record in your account just now? 1859 ni kita hanya record 952400. So kita akan credit sebanyak itu sahaja ya. So 952400. Kan tak balance tu debit credit madam. Dah kenapa macam tu recordnya? Itulah yang dikatakan the difference between the present value and the immediate price is the interest expense. So yang tak balance sebelah mana, yang tak cukup sebelah mana. So yang tak cukup sebelah debit. Sorry. So I have to add in between debit. Okay, siapa yang tengok telefon tu jenuh you kena zoom in. Okay, so sopan. Dipanggil apa? Interest expense. So interest expense, the difference. Okay, berapa the difference? I don't have the calculator, so you kira lah the difference, then you put it here. Okay, so difference tu you letak kat sini. Ni kira lah difference tu kat sini tak? 48 ni. Okay, alright. So that difference will be recorded as interest expense. Similarly, if you show the computation for the next 2 years, okay, for year 2, sama. Debit account payable 907, this one, 907,000, okay, 907,000, tak cukup zero kat situ. Alright, and then credit cash 1 million, because this is the amount that we owe to that person. Alright. Tapi dalam record kita record present value sahaja. Okay, so when there is any difference, okay, between debit and credit, that amount then will be recorded as interest expense. Okay, okay, so you don't have to worry too much about this question because usually we did not ask you, usually so far we only ask you to show the computation for the initial cost in year today. Alright, year 0. Alright, and then we are going to ask you to prepare the journal entry for today. Alright, okay, so far I did not find a question that asks the student what happened in year 1 or year 2, 1 year after that or 2 years after that. Alright, okay, so any question on this one? Deferred payment. Okay, we have one last topic for today, so please bear with me. Okay. Alright, no question? Okay, no message as well. Okay, so next. Okay, so next one is asset exchange. Okay, asset exchange. Asset exchange, for example, you exchange old car with a new car. Okay, or you exchange building with another building of other business. Alright. Okay, so asset exchange. PPE may be acquired in exchange for a non-monetary asset or a combination with cash. Okay, in exchange of non-monetary asset, meaning that in form of other asset, okay, building, motor vehicle, land, alright, or a combination, or you have to add more money to that. Okay, alright, so what is the asset acquired or received initial cost? So now you receive new asset. Okay, you receive new asset. You know the asset is PPE, of course. So property, plant and equipment. Let's say, for example, you exchange land with land. So you not record land here. But the question is, okay, if we look at the element of cost are the purchase price, are there any cost directly attributable to bring the asset, are the initial estimate of removing, restoring, dismantling. Okay, so kalau tengok dekat sini dia tak ada kata ambil, kalau ambil aset lain, okay, cost dia apa? Okay, so for asset exchange, it is mentioned also in the standard. Okay, you take the initial cost is the fair value of asset given up. What is asset given up? Asset given up is your existing asset that you intend to change with other person asset, your asset. Okay, your previously it is your asset, now you want to change with. Okay, so before you change, on the day you want to change with, you want to exchange your asset, you have to get the fair value. Okay, you have to get the fair value of your asset. So if you own a land, so you have to get the fair value of land. Okay, on that day, on the day you want to exchange with another person asset. Okay, so unless dia kata dekat sini, unless the fair value of asset received is more clearly evident, unless harga yang satu lagi, aset yang satu lagi tu lebih jelas, more clearly evident. Okay, okay, I give you a simple example. Okay, let's say for example you want to trade in old car with a new car. Okay, so for a new car, let's say for example you want to buy, okay, apa ya yang baru, Proton X50 for example. Okay, sebab yang tu je banyak saya nampak people sharing ya on the internet. Okay, so katakanlah you want to purchase a Proton X50. Okay, Proton X50. Is it easy for you to get the price? Or is it difficult for you to get the price, to know the price, to get the information about the price? Okay, it is as easy, it is at your fingertips, right? You can simply search from the Google and then you get the price, right? Okay, or you may call the car seller and then ask for the price. Very easy. Compared to you want to value your own car. Okay, compared to you want to value your own car, because the price is not available. It is available online, but still when you look at let's say for example currently you have what car, let's say you have another Proton car, Proton apa yang orang ada, Perdana lah, sebab tu biasa kereta-kereta syarikat yang ada. Okay, Proton Perdana. Okay, katakan you ada Proton Perdana, so you nak tukar dengan X50, you nak upgrade sikit. Okay, so that Proton Perdana, when you want to search for the market price, then maybe you go to, orang kata kita tengok kat mana, sekarang banyaklah iklan ya, is it Kasam, okay, or you go to Mudah, alright, but still you find the difference in the range of in the price. Okay, there are differences even of the same make, same year, same apa, but still you find different. Okay, so itu contoh lah. Okay, this is only example ya, example yang dimaksudkan unless the fair value of asset received. Asset received, new car you want to receive, you are going to receive new car compared to asset that you want to give up. Okay, so the fair value of asset received is more clearly evident. Okay, example ya. Alright, however, if the exchange lack commercial substance, lack commercial substance, kenapa? Maybe you exchange the asset with related party, harga kawan-kawan, harga keluarga, so different price, lack of commercial substance, or the fair value of both asset received, asset given up, okay, cannot be measured reliably, then we are going to take, okay, for the initial cost, okay, we are going to take the carrying amount of asset given up. We are going to take the carrying amount of asset given up. Why asset given up? Why not the asset received? Because what we want to find is the initial cost of asset received. Kenapa nak kena tengok asset given up? Because asset given up is your asset that you want to exchange with another asset. Your asset is recorded in your books of account. You have that information. Okay, it is impossible, I think, for you to ask for carrying amount of asset received. You pergi tanya buku dia, berapa ya you record the carrying amount? Can you do that? You simply go to that business, you ask, berapa you record carrying amount untuk asset ni? Of course you cannot get the information. Okay, but what you have with you is the carrying amount of your asset that you want to give up, that you want to exchange. Okay, so you record at the carrying amount of asset given up. Okay, alright, so when you do asset exchange, so of course you are going to de-recognize your old asset. Okay, so this is new. Okay, for old asset, then you have to credit. Okay, let's say for example new asset, Okay, you nak tukar ya. So land ini yang old lah. Okay, the one that you have with you. Okay, so you want to exchange land with another land. So you get the fair value of your land. So fair value of your land is, let's say, for example, 1 million. Okay, and then your land is value at cost, meaning that at cost using cost model. So cost minus, tapi land tak ada depreciation ya. Okay, so land tak ada depreciation. So dekat sini maintain lah 1 million. Okay, land dia kita revalue selalunya. Alright, tapi kalau kata aset lain, okay, let's say for example motor vehicle. Okay, new ada old motor vehicle, then there might be a difference in price because kita kena tutup juga dia punya accumulated depreciation account. Okay, nanti kita tengok yang ni ya. Okay, so any difference, okay, will be recorded as gain or loss on disposal and recognized in SOFL. Okay, so let's look at one last example for today. Okay, so faham ya, asset exchange with another asset. So the question is, how much is the initial cost? Okay. All right, example, a vehicle costing 130,000 was traded in for a new vehicle. Okay, so this is the old vehicle. Okay, the cost is, original cost is 130,000. The trade-in allowance is 60,000. Okay, meaning that if the owner of the old vehicle would like to trade in for a new vehicle, okay, the shop would like to take to give 60,000 for the old vehicle. Okay, and then the accumulated, okay, additional info, accumulated depreciation of old vehicle is 52,000. Okay, on top of trade-in allowance, okay, they have to pay also for, they have to make cash payment of 150,000. So how much is the initial cost of new vehicle? Okay, so let's focus on the computation of the initial cost. So now we have the fair value of asset given up. We have the fair value of asset given up. Which one? 60,000. Okay, and it is combined with cash, 150,000. So how much is the initial cost of new vehicle? Okay, so this is the computation. Focus here. All right, so the fair value of asset given up is 60,000 plus cash payment 150,000. Therefore, the initial cost of new vehicle is 110,000. Okay, so now let's record this transaction. Okay, so let's record this transaction. All right, so for the computation of initial cost, that's it. Very simple. Fair value of asset given up plus cash payment. Okay, then you get your initial cost of new vehicle. Very simple. Okay, that's it. Now let's look at the journal entry to record all of these transactions. Okay, so number one, we are going to record the new vehicle. Debit vehicle 210,000 from the computation before. Okay, and then because we are going to give up our old asset, so we are going to de-recognize from our account. Okay, so to de-recognize from our account, what do? Number two, we are going to credit our asset account. We want to remove the old asset account. Okay, we want to remove the amount of old vehicle. All right, so we remove the cost, which is 130,000. Okay, and then we have to remove other related account as well, related to vehicle. What is the account? Accumulated depreciation. This is of old vehicle. Okay, so now remove accumulated depreciation. Accumulated depreciation is basically credit account. So now remove, we have to debit. So number three, remove based on the additional info given just now, 52,000. Okay, and then we make cash payment. So credit cash. Number four, 150,000. Okay, so now you have recorded the de-recognition of old asset. Okay, any difference, okay, any difference is to be recorded as either loss or gain on disposal. So in this case, okay, the difference is at debit, so we have to add debit here, okay, 18,000. So when you debit, then it become loss on disposal. If the difference is here at credit, credit less than debit, then you record SOPR gain on disposal.